Now speaking, Ken Bond, Head of Investor Relations. In Oracle's fourth quarter and fiscal year 2023 earnings conference call, Chairman and Chief Technology Officer Larry Ellison and Chief Executive Officer Safra Catz discussed forward-looking statements which may affect actual results. Oracle cautioned against placing undue reliance on these forward-looking statements and encouraged investors to review their 10-K and 10-Q reports for a full discussion of the risks that may impact future results or the stock price. The call concluded with prepared remarks from Safra. Now speaking, Safra Catz, Chief Executive Officer. As we look ahead to fiscal year 2024, I feel great about the business. Our cloud growth should remain strong and our operating margins should continue to improve significantly. We expect to have a very good free cash flow year as well. You are listening to the Oracle Corporation's latest quarterly earnings call. In this call, Oracle CEO shared that despite the closure of their nearly $500 million Russia business, their organic revenue growth accelerated significantly. Strategic back-office SaaS business more than doubled in size and consumption of their Gen 2 cloud infrastructure service is now 7 times larger. They also reported total cloud services and license support revenue for the quarter was $9.4 billion, up 25%. Application subscription revenues were $4.4 billion, up 37%, while SaaS cloud revenue, excluding Cerner, was up 17%. Infrastructure subscription revenue, which also includes support, were $5 billion, up 15%. Database subscription revenues were up 6%, highlighted by cloud database services, which were up 41%. Non-GAAP operating income was $6.2 billion, up 12% from last year. The non-GAAP tax rate for the quarter was 9.2%, and the non-GAAP EPS was $1.47 in US dollars, up 8% in USD, 10% in constant currency. For the full fiscal year, total company revenue was $50 billion, up 22%. Total application subscriptions grew 35% and 10% excluding Cerner compared to 8% last year. Total infrastructure grew 10% compared with 5% growth last year. Non-GAAP EPS was $5.12 in USD, up 4% in USD, and up 10% in constant currency. Operating cash flow for the quarter was up 42% at $5.6 billion and free cash flow was up 46% at $3.7 billion. The remaining performance obligation, or RPO, balance was $67.9 billion, up 47% in constant currency. For Q1, Oracle expects total revenues, including Cerner, to grow from 7% to 9% in constant currency and 8% to 10% in USD. Total cloud revenue, excluding Cerner, to grow from 28% to 30% in constant currency and 29% to 31% in USD. And non-GAAP EPS to grow between 8% to 12% and be between $1.11 $1.15 in constant currency and 9% to 13% and be between $1.12 $1.16 in USD. For fiscal year 2024, Oracle expects cloud growth to remain strong and operating margins to continue to improve significantly, with a very good free cash flow year. Now speaking, Larry Ellison, Chairman and Chief Technology Officer. Oracle's Gen 2 Cloud offers customers hardware and software that is more powerful than their competitors, with CPUs and GPUs connected by an ultra-high-performance RDMA network. As customers pay for usage by the minute, Oracle's cloud makes usage twice as fast and half as much in cost. Additionally, the low latency and high bandwidth RDMA network makes it ideal for building large-scale GPU clusters used to train generative large language models, leading to over $2 billion in contracts from AI development companies. To further protect customer data, Oracle and Cohere have launched a generative AI cloud service for enterprise customers, enabling them to train specialized large language models while keeping their data private. These specialized models are expected to revolutionize healthcare, greatly speeding the discovery of new drugs and improving patient care and access. Guggenheim Partners analyst John DiFucci inquired, what factors are driving Oracle's cloud business acceleration when other companies are seeing the opposite effect? Safra Catz replied, the fact that OCI is growing and accelerating is due to customers wanting more efficiency. Our fusion technology allows them to spend less and make better decisions, while simultaneously improving their competitiveness and agility. OCI has been a major factor in our competitors losing customers as workloads are often running at 10x, 100x, or even 1000x faster on OCI. This combination of improved performance and cost savings has made it very attractive for customers to switch to us. Larry Ellison replied, we've seen significant cost savings when running applications in our cloud versus competitors' clouds. We have a fast RDMA network, which enables us to build GPUs faster than anyone else. This allows us to provide much faster query processing and 1,000 times speedup versus Amazon Aurora, for instance. Additionally, Fusion ERP is 1/10 the cost of implementing SAP's new ERP system with HANA. This has enabled us to take market share from our competitors, resulting in our improved performance versus theirs. Deutsche Bank analyst Brad Zelnick inquired, Larry, as Oracle looks ahead 5 years, how much of the AI opportunity do you expect to capture in your infrastructure and applications? Larry Ellison replied, yes, absolutely. Oracle's cloud differentiates itself from the competition with a continuous feedback loop between infrastructure and applications. We use our infrastructure to build enterprise-scale applications with Apex, a low-code development tool that can scale up to millions of users. This has allowed us to obtain insights to make improvements in our productivity and reduce costs 10x. We've also used AI technology for an autonomous database and self-healing cloud. This is why we have technologies others don't have and gives us a competitive advantage. Mizuho Securities analyst Siti Panigrahi inquired, what is driving customer migration to your SaaS applications, and how has combining horizontal applications with vertical offerings helped SaaS growth? Safra Katz replied, our secret weapon is the combination of our vertical applications with our horizontal ones. We are popular among customers in many industries, including healthcare, financial services, retail and hospitality. Our solutions are tailored to customer needs and include an upgrade every 90 days with new capabilities. This makes us very competitive and has driven our momentum around the world. Larry Ellison replied, our investment in Cerner has allowed us to specialize our HCM system for the healthcare industry. This system is designed to manage a hospital workforce, which can be complex due to nurses having private patients, multiple jobs at different hospitals, and other responsibilities outside of the hospital. Our Oracle Fusion HCM system includes features to help with scheduling, recruiting, and paying these professionals in an efficient manner. We are also working to automate the entire healthcare ecosystem, from the pharmaceutical companies designing drugs to the regulators approving them, through digital software solutions. Barclays analyst Raimo Lenschow inquired, Safra, what progress have we made on capturing synergies and reducing costs since Cerner became a part of Oracle? Safra Katz replied, thank you for your question. We are just beginning to make progress in our operations and legal entity changes which will give us more flexibility. Our margins are far from where we want them to be, but we are seeing improvements as we move our technical capabilities into the Oracle Cloud, resulting in cost savings. AllianceBernstein analyst Mark Merdler inquired, can you provide some insight into the customer and industry concentration of your OCI Gen 2 business, both in terms of existing customers in the pipeline? Safra Katz replied, the reality is that our customers range from very small to very large, and when they get started, we are usually a small percentage of their IT costs and cloud spending. However, as they try us out, they move larger percentages of their business away from other clouds or from on-premise servers. We are early in this transition, especially with databases, but most customers quickly realize how much more cost-effective, secure, and advantageous it is to move to us. Our customer base is diverse, spanning all industries, from auto companies doing simulations to many more. Larry Ellison replied, the most interesting industries adopting Oracle Cloud are technology companies and highly technical industries such as telecommunication companies. Companies like Zoom, NVIDIA and Cohere have seen performance and cost advantages of utilizing the Oracle Cloud. Additionally, its network is highly reliable due to its autonomous database, which eliminates the risk of data loss from pilot error. We've seen adoption of Oracle at scale in these areas, and now less technical companies are beginning their journey to look closely at the Oracle Cloud. When they do, we compare favorably with other clouds. Evercore IC analyst Kirk Materne inquired, Safra, what efficiencies enabled you to keep CapEx flat going into next year despite high demand for OCI? Safra Katz replied, this past year was a big CapEx number relative to our usual investment. We allocated a lot of capacity and it's already being filled up and utilized. Additionally, our underlying infrastructure is becoming increasingly efficient, especially as we move to autonomous database serverless. This enables us to miniaturize our capabilities for greater efficiency and cost savings. We've already gone from 12 racks to 10 with all the services, and if we maintain this level, we should be able to handle more workloads within the same envelope. Ken Bond replied, thank you, Safra and Kirk. A replay of this conference call will be available for 24 hours on our investor relations website. I'll now turn the call back to Lisa for closing.